Is the housing market about to crash? The short answer is no. I don't think that it is, but let's break it down so that you don't have to rely on internet doom scrolling at 4 a.m. for answers, because we all know how scary that particular rabbit hole can be. Do you remember 2008 and the great financial crisis? Well, I don't either, because I was only 14 years old and definitely not a homeowner at that point in time. But I do remember the news and everything that was on the TV and how absolutely scared people were. It was a rough time for the economy and especially the housing market. Now, at that time, over 100 mortgage companies folded and home prices, they just plummeted and fell through the floor. The Great Recession that followed, it was painful, and millions of people were losing their homes, their jobs, their savings, and so much more. Fast forward to today, and many people still carry that financial trauma, wondering if they could face a similar fate in today's real estate market. So if you're asking, what if I buy a house today and the market crashes tomorrow? What happens? And trust me, you are not alone in wanting answers. Many of my clients are asking that exact same question. But here's the thing. What happened in 2008 was a perfect storm of poor lending practices, wild speculations, and an economic downturn. The housing market's collapse was driven by high-risk financial behavior, with lenders that were offering loans to basically anyone with a pulse. Today, it is a completely different story. So we need to first understand the cycles of the housing market, because the housing market, it doesn't operate in a vacuum. It goes through these cycles where there's phases of recovery, expansion, peaks, contractions, and of course, the good old recessions. In times of expansion, home prices rise as demand outpaces supply. During contractions, when things slow down, a recession tends to hit and prices tend to go down as well. Understanding where the market stands within these different cycles can help you predict likely what is going to happen next based on history. Right now, we are in a phase where home prices are high due to limited inventory and really strong demand, but the expansion cycle, it's not going to last forever. Markets do correct themselves over time, but those corrections, they are often gradual rather than being this catastrophic moment in time. Understanding these cycles will help you make a more informed decision, regardless of whether you're buying a home for the long term or just the short term. Now let's talk about good old interest rates and how they will affect you as a home buyer. Interest rates, they play a massive role in shaping the overall landscape of the housing market. When the Federal Reserve raises interest rates, borrowing money, it becomes very expensive. This means that mortgages are going to cost more, which can cool off demand. On the other hand, when interest rates go lower, buying a home becomes more affordable and demand tends to increase. As we've seen in recent months, high interest rates have cooled down some parts of the US real estate market, but there are still areas where demand remains high. Just this past weekend, I had 2 different buyer clients who placed offers on houses that were in multiple offer situations. Here in Salem, if a house is turnkey ready and priced to sell, you will see multiple offers even though interest rates are high right now. On the flip side of all of this, we are seeing houses that do not have multiple offers. Houses that are in need of repair or aren't as clean or turnkey ready, those houses, they are sitting on the market. Since interest rates are high, buyers are expecting that the houses that they go to purchase, that they're move-in ready. Buyers do not have the extra cash on hand to be buying a house in need of any type of immediate repairs, whether that be cosmetic or structural. Overall, higher interest rates means that you as a buyer, you need to prepare for your monthly mortgage payment to be a little bit steeper than what it would have been when interest rates were low. Now, let's chat about how to protect yourself from some of this market volatility. While we cannot predict the future of the housing market with certainty, there are steps that you can take to safeguard yourself financially if the market takes a downturn. The first thing to keep in mind is that it's really important to be building up a strong emergency fund for yourself. In an ideal world, you would be saving 6 to 12 months of living expenses in that emergency fund. This buffer can give you peace of mind in case your financial situation does change after you buy a house. Another safeguard is to avoid overextending yourself when you're buying a house in the first place. Stick to a budget and avoid purchasing a property that pushes you outside of your financial comfort zone. By keeping your financial options open, you are going to be so much better prepared if the market starts to correct itself or just your personal finances change. Let's discuss the future of remote work and how this impacts housing demand. One factor that is severely reshaping the housing market is the rise of remote work. The COVID pandemic, it showed us that working from home is possible for millions of people across the US. As remote work becomes more and more common, many individuals are relocating from expensive urban areas to more affordable suburban or just rural areas of the US. And this shift has created a new demand for houses in areas that were once less popular. Remote work has also given people more flexibility in choosing where to live, which may contribute to different regional market differences that we haven't seen before. However, as we have seen this week with the new administration, many government workers have been told that they need to go back to their offices and that remote work is no longer an option for them. This may cause a ripple effect with other large companies too. This might just be the first callback of many. I don't know the future of remote work and where it all stands, but I can tell you that I personally have already had a transaction fail because my clients, they were once approved to work remotely, and then once we got very close to the closing table, they were denied permission to work remotely anymore, and they had to terminate their transaction. This is not just a hypothetical or a possibility. Being called back to the office from previously remote positions is having a real world effect for many people on day one. So if you are considering working remote and moving here to Salem, Oregon, make sure that you are 1000% positive that they're not going to pull a fast one over and call you back into the office. All right, let's chat about the psychological effects of buying a house, because it's not a business transaction. We're talking about your future home. We simply can't overlook or minimize the emotional side of buying a house. The decision to buy a house is often one of the biggest financial and emotional commitments in a lot of people's lifetime. I joke that I am a real estate agent, but that I'm also partly a therapist. And while that's kind of funny, it's also true, because buying a house is incredibly emotional. And these emotions and this excitement of owning a house, it can cloud judgment, especially when it is coupled with fear of missing out on the perfect deal or simply making a poor investment. Fear and anxiety often lead people to making impulsive decisions, especially when they are faced with headlines warning of a huge financial and housing collapse. It's important to keep your emotions in check throughout this process. Take a step back, consult with the professionals, aka me, and make decisions that are based on facts and your long-term goals rather than short-term fears. Now, let's chat about preparing for a housing market correction. So, even though an all-out crash like 2008 is unlikely, it is possible that the housing market may face a correction in the next coming years. A market correction, it doesn't necessarily mean that there's going to be a dramatic drop in house prices. I know, that's not what you want to hear. It might just simply mean that there is a leveling off of home values and a slowdown in growth. To prepare for a correction of whatever type, you as a home buyer should consider making purchases with your long-term goals in mind, aka avoid trying to time the market or purchase a home with the hopes of selling it quickly for a profit. I want you to think about buying a home that suits your lifestyle and your needs for years to come rather than just looking for short-term gains. Also, you should ensure that your financial situation is stable enough to weather any potential slowdowns without having to sell or refinance for less favorable conditions. Okay, now let's chat about the long-term versus the short-term versions of homeownership. It's important to understand the differences between buying a home for the long term versus short-term investments. If you are buying a home to live in for the foreseeable future, short-term fluctuations in the market, they won't have the same impact on your financial well-being in the same way that a short-term investment might. Home prices may dip or rise, but if you are not planning to sell within the next few years, the value of your home won't matter as much as it would in the short term. However, if you are buying a house as a short-term investment, you should be much more cautious and consider factors like market trends, potential interest rate hikes, and the overall economic conditions. If you are like most of my clients and just looking to get into a good, solid home and you don't plan to move anytime soon, then I have full confidence in saying that buying a house is still a solid long-term investment for the majority of people. So, after all of this, what the heck should you do? If you are buying in today's market, it's really important to plan for the long-term game. But overall, keep your emotions in check. Educate yourself about the market and don't let fear drive your decisions. The internet is full of dramatic headlines, and I even made you click on this video because I had one. But before you panic, consult with actual experts, your lender, your real estate agent, your financial advisor, those types of people. The housing market is complex. It is a living, breathing thing, and understanding the cycles and interest rates and government policies and psychological factors that influence it will help you make an informed decision. If you enjoyed this video, you are going to want to watch this one next. Bye, friends.